Hello and welcome to the look ahead for Thursday, the 21st of December, with me, Fiona Cincotta, Senior Market Analyst at City Index. So, on the earnings fronts, we might be closing in on Christmas, but there are still some earnings to be watching out for. Tomorrow, we have Nike and Carnival, who will be giving us their latest numbers. Nike will be reporting after the close, and their results come after they rallied hard across the final quarter of the year from those 2023 lows, up around 36% from those lows. Obviously, that is in line as well with the broader market, but outperforming the broader market. Now, we're expecting from Nike to see EPS of 85 cents per share. That's up from 75 cents per share in the previous quarter. And revenue is also expected to come in at 13.43 billion US dollars, which is up from 13 billion in the previous quarter. Now, we've seen an increase in quarterly revenue now for the past 3 quarters from Nike. So the markets will be watching to see whether we can continue with that trend. And just having a look here at the chart, we can see that Nike has had that good rally. It trades within that rising trend line, just up on the rising trend line resistance of that rising channel. As far as what to be watching for, I think if we do make a breakout of that rising channel, then we'd be watching for a move towards the $127. That was the high that we saw from the March-April time. And if we do see any weakness come in, so perhaps weaker than expected results, then we'd be looking for support around the 117 level. That's the low that we just saw in the middle of November there. But also, sorry, the break in trade that we saw in the middle of November, also a level that's sort of been important at the beginning of the year. Break below there would see us watching for $113 the share. So just moving on, what else have we got? We've got the UK public sector net borrowing figures expected to come in down 12.9 billion after being 14.89 billion. I think as far as what we're watching for sterling, we did actually have some big data in for sterling today, which has provoked a strong move in the pound. We had the UK inflation data come in. Now, it came in weaker than expected at 3.9%, below the 4.4% expected. Biggest downside surprise since 2021. And I think it just also makes us question about perhaps how pessimistic the Bank of England were in the meeting last week, whether they perhaps overplayed that pessimism, saying that interest rates would need to stay high for an extended period of time. We think inflation's cooled significantly more than expected. We also got that contraction we saw in the GDP in October. So I think there is a potential that the Bank of England will be moving to cut interest rates sooner than what they are telling the market. Markets upped their rate cut bets for the pound quite significantly. For the Bank of England quite significantly following today's data. Now fully pricing in 525 basis point rate cuts across next year. That was up from around 110 basis points worth of cuts at the end of last week. Now, as we see the though that being reflected in the value of the pound, we can see that the pound has come off. It's fallen again. It's struggled at that rising trend line resistance. That's around the 127 mark. That was the high for the day, rebounded lower following the data. Be looking for support, trading now around 126.50, support around the 126 level. You've also got the 20 SMA in there actually, which is just above the 126, around 126.30, so it's trading caught between the 20 SMA and the rising trend line. So, I mean, there is potential for a fall lower given the inability to and the rejection that we've seen at that rising trend line now on several bases. I think a key level to be watching will be around the 125. 125.20, that's the 200 SMA. It's also the low level that we saw at the beginning of December. As far as the upside is concerned, if we do see a rise over 127, that's going to bring in the 127.90 level, which was the high that we saw at the end of November to create a higher high. As far as data is concerned, as I said, you've got the public sector net borrowing, probably not going to be a massive driver. If we're looking for a big driver, that was the inflation data that we had today. We've also got GDP and UK retail sales due out on Friday, but we'll be having a look at those in the video tomorrow. So just cracking on then with what else there is to watch. We've got Canadian retail sales for October. They're expected to rise actually 0.1%. 0.8% up from 0.6% month on month previously. Interesting. This is going to be interesting to watch. Obviously, we had the inflation data out from Canada, which was also slightly stronger than expected. So actually, there is some resilience in the economy despite the aggressive interest rate hikes from the Bank of Canada. Their meeting minutes are out today. The meeting was actually, although they left interest rates on hold, the meeting was a little bit more hawkish perhaps than what we were imagining. Anyway, we won't be looking at the chart today because we can't do everything. But the other thing we'll be watching as well, sorry, let's just go here, is US GDP and also US jobless claims. GDP data. So this is, we saw there was an upward revision for US GDP to 5.2%. Annualized in the third quarter. This is the final reading, so we're not really expecting a massive movement in the market or a big revision. Also the data almost feels a little bit stale given that this is Q3 and we're almost now at the end of Q4. But still, it's also worth keeping an eye out for. As well, jobless claims, they're expected to be around that 215,000 level. As I said previously in these videos, keep an eye on those continuous claims because they're the ones that have been slowly creeping higher, which suggests that Americans that don't have a job are finding it harder to find employment. So that would be a sign that weakness is starting to really creep into the US labor market, which we haven't really seen so far. Strong data from the US is keeping that optimism alive of that softer, the soft landing, which, we've seen that help stocks tremendously over the last few weeks. But just before we get onto that, just want to touch on the US consumer confidence data, which was released today. We saw a strong rebound in consumer confidence up to 110. That was at 102 in November, rallied to 110. That was above the 104 that it was expected. And it was the largest increase in consumer confidence that we've seen since the end of 2020. So that is quite an interesting statistic. Again, it feeds into this optimism of the soft landing for the US, which is going to be a big focus as we go into 2024. Now, as I've talked about, those dovish Fed bets and hopes of a soft landing have seen US stocks soar, not just US stocks, but this is what we're looking at the moment. It's seen S&P, NASDAQ, Dow have phenomenal a couple of months across November and December. The Dow and the NASDAQ have hit record highs. The S&P is closing in on its record high. It's only around 1% off at the moment. As we can see, it's continued to grind higher despite being very overbought. So despite being very overbought, no one's really wanting to sell right now, which I think is quite telling in itself. The price is edging towards the S&P's 500's all-time high, which is at 48.17. There are a couple of levels of support on the downside, say around 47.50. You've got a level in there, 4700 as well. But as far as serious levels of support and negating that uptrend, that's not really anything that's seen till down around the 46.50 levels. So yeah, definitely one to be watching tomorrow. That's it from me today. If you like what you've seen, then please remember to press like. And if you would like to receive more videos like this, then please do subscribe. And thank you very much.